Welcome to the Meb Faber Show, where the focus is on helping you grow and preserve your wealth. Join us as we discuss the craft of investing and uncover new and profitable ideas, all to help you grow wealthier and wiser. Better investing starts here.
Meb Faber is the co-founder and chief investment officer at Cambria Investment Management. Due to industry regulations, he will not discuss any of Cambria's funds on this podcast. All opinions expressed by podcast participants are solely their own opinions and do not reflect the opinion of Cambria Investment Management or its affiliates. For more information, visit CambriaInvestments.com.
This episode is sponsored by our friends at YCharts, the all-in-one platform for investment research, client communication, and proposal generation, built specifically for today's advisors. With time-saving features like AI chat, quick extract, and customizable proposals, YCharts brings everything into one place so you can stop juggling software and focus on what matters most, your clients and growing your business. In 2024, advisors using YCharts added an average of $33 million in new AUM, all while saving 20 hours a month on research, proposals, and meeting prep. That's basically half a work week back in your pocket. That's why 9 out of 10 advisors rate YCharts above average or best in class for ease of use, data depth, and overall effectiveness. And when it comes to service, users give YCharts 4.5 out of 5 stars for their white glove support. No bots, just real support experts ready to help whenever you need it. Whether you're growing your book, sharpening your process, or deepening client trust, YCharts is the platform to get it done. See for yourself and get 20% off your initial YCharts professional subscription when you start your free YCharts trial, and tell them that Meb sent you for new customers only. Welcome back, everybody. Awesome show again today. Our guest is Carl Kawaja, a portfolio manager with Capital Group, which manages over $2 trillion. Carl's been at Capital Group for over 3 decades, built an incredible track record all along the way. Carl, welcome to the show.
Thanks very much. Glad to be with you.
Where are we finding you today?
I'm actually on vacation, so I'm not at home. My usual home is San Francisco, but today I am in Maui, Hawaii. So wanted to be on your show very much. So taking a little break from my vacation here to join you.
Well, hopefully we'll get you back out in the ocean somewhat soon. I think for the people who don't know you, what's your style? How do you describe yourself? I get an idea, but for those who are new to Carl, when you go to a cocktail party in Maui, when you're on the beach telling people what you do, how do you describe it?
Thank you. I think I'm pretty flexible as an investor, and kind of a role model of mine was my grandmother, who ran a small general store in a small island in the Caribbean, where that part of my family is from. And my grandmother, it was kind of one of those old-fashioned stores where the proprietor sits kind of in a crow's nest position above the store, so you can watch for shrink and stuff like that and keep an eye on the store. And this is a very small island. It's called St. Christopher or St. Kitts, and stores really weren't very specialized. And so they sold everything: batteries, mangoes, milk, clothing, shoes, washing machines, and so on. And my grandmother kind of had a philosophy kind of rooted in her practical experience, understanding that some items you sell kind of for turn, and they almost have like negative working capital. And one thing she sold is she imported shoes from Asia that she sold for just a few pennies in the 50s and 60s. And those turned very quickly, so they didn't have much inventory cost. And so that was kind of one way to make money. And then she also sold bolts of cloth, kind of nice, beautiful bolts of cloth that women on the island purchased to make dresses for church on Sundays. Sunday church was like kind of the big social event on the island. And no one wanted to show up at church wearing the same outfit as someone else on a big day, like an important day, like around Easter or something like that. And so these bolts of cloth, they sold slowly, but they had high margins when you did sell them. And I sometimes think about stocks in my portfolio the same way. I don't think I have any half penny stocks, kind of, that I'm trading in and out of. But there was kind of a sort of a flexible approach to making money, and understanding that for me, different kinds of investments have different rationales behind them. So I'm not someone who has like a very pure approach. And I guess other ways that I might characterize my investing style, Meb, would be I usually like to understand one thing about a company, like understand one element of the hypothesis and feel like I have a different view about that than other people and feel like that is important to the thesis.
Those are both great. It's funny how you talk about your grandma and how much our relatives inform us. Yeah, I think, you mentioned that wasn't your father an academic in kind of the finance world as well? Did I hear that right?
Yes, you did. That's right. My father got his PhD from Columbia Business School. So I grew up in a household. I mean, you can guess this from my grandmother, but I grew up in a household where we always talked about ways to make money. My family is very interested in that. So we'd go to a restaurant and my dad would say, "How do you think this restaurant could be more profitable?" Usually his main suggestion was to raise prices. My dad would say, "Would you lend money to this business or this person? How do you think about that?" And my father left academia. He taught at UCLA and then he taught at schools in Canada. He taught finance. And then he went into business himself and became an entrepreneur and sort of followed in the family tradition. I'm the black sheep. I work for a large mutual fund company and been very happy here, but my dad thinks I'm crazy.
We got to ask now that we're here. You remember your first stock investment? Was this early age, later age?
I do. In 1980, I asked my dad, it was in my sophomore year, I think, end of my sophomore year in high school. I told my dad that I would like to open an investment account to buy shares in Apple Computer because I thought that they were, going to do well. I was sold on it that Apple computers were much better than other computers and were going to do well. I don't still hold those shares, unfortunately. That was one of many investment mistakes I've made personally over the years, but that one got me pretty interested in investing.
One of my favorite ideas is a brokerage that basically acts as a lockbox where you buy shares of a stock or buy an investment and you can't sell them. It's essentially kind of an annuity, but say, hey, look, I'm in this and maybe you can sell it, but you have to pay like a 10% penalty or something. And would love to see some of those giant compounders 10, 20, 30, 40 years later. We have an old guest on the podcast, Paul Merriman, who manages money out of the Pacific Northwest. And he does a fun thing for his grandkids where he would put $10,000 into the market, but it's a 50-year, they can't touch it, essentially some sort of trust. And 10,000, if you compound 50 years, that could be north of $1 million. And there's some limits on what they can do with it, et cetera. But as a way to kind of demonstrate to them that the real effects of compounding, which I thought was a pretty cool idea.
Yeah, my wife's family has benefited from the fact that her grandmother's father in the early 1940s, I think he put about $10,000 into a handful of what seemed like great American companies, Pfizer, Coca-Cola, IBM, General Electric, Union Pacific, and they've just sort of held them continuously. And I'm always amazed when I look at my wife's investment account and see these stocks that she's held for such a long time. And I listened to one of your recent podcasts. I think I'm going to mispronounce his name, but Professor Damodaran at NYU. And I was listening to him talk about NVIDIA and kind of talking about how hard it is to hold on to things sometimes. It's an interesting kind of challenge in our business.
The Bessenbinder studies that look at some of the best performing, we had Hank on the podcast not too long ago, and he did these old famous study, do stocks outperform T-bills, and talks about these small percentage of stocks that are these massive compounders. And I was like, hey man, in the last 100 years, what was the best performing stock? And he gave us a running list of the top 50. And it's sort of astonishing, to see what they are. Everyone just, I think, always assumes they're going to be tech, but it's a laundry list, even of the past 25 years. We did a tweet from Bespoke where I said the list of the 100 plus baggers, it's like beverages, land royalties, shoes, farm supplies, car parts, kitchenware, copper mines. It's like doesn't have to just be tech, even though most people kind of associate that with it today. Of course, NVIDIA's on there. I think it's number 2.
I think there's also something, one of my colleagues has a philosophy that's informed me. He sort of believes in letting your stocks that have been strong performers sort of continue in your portfolio because he sort of thinks their success is sort of self-reinforcing. And I would say that he's humble about his own inability to forecast the future. And I I try to remember that myself. Like I feel very lucky to work at this firm that I feel like has tremendous resources. We have so many analysts who are so accomplished and get great access to companies, but often things surprise us. I feel that way about Google myself. I remember at the 2004 IPO, I think the market cap was 34 billion at the time. We had an analyst who did some really great work on it and really kind of understood it and explained it well to me. And he built a great earnings model. And just for fun, I took his earnings model and I tweaked it and I basically doubled the earnings that Google was going to achieve 5 to 10 years out. And then, of course, they did much better than my doubling.
Was Capital Group post grad school? Where did that fit in on the timeline for you?
Before business school, I also went to Columbia where my father went, Columbia Business School, and I graduated in 1991. But before business school, I'd worked on the sell side as an investment analyst, writing up stocks. And I really want to be a professional investor and have money to manage. I went away the fall of my second year, which is usually the recruiting rush at business schools. I studied in London because I was interested to kind of live and study there at London Business Schools for a semester. So I kind of missed the main recruiting rush, but thankfully someone at Columbia signed me up in the career placement office for an interview with Capital Group. And I went to their presentation and I really liked the culture. I really liked the people I met. But also they said to me, we will give you money to manage and you will start managing it and you'll be judged based on how you do managing these assets. And with all the enthusiasm and confidence of youth, I said, this is a place for me. I'm going to do great. And they were true to their word. In under a year of being an analyst there and writing research, I was managing portfolios in the area that I covered. And it's continued since there. So I've been here since 1991. And our philosophy at Capital is that we give people a tremendous amount of discretion to decide how they invest assets. And we don't have a top-down philosophy at all. It's not like we have a strategist who says, it's time to be bearish, it's time to be bullish, it's time to like Japan or something. We let people come to their own conclusions because I feel like one of the hardest things to do, and maybe this ties into what you and I were chatting about before, is to identify the sort of disconfirming evidence and to do the thing that is unusual. I believe that it's errors of omission more than errors of commission that hurt you. And I feel like our system works pretty well to eliminate, or, you can't totally eliminate, but to not commit that error. Errors of commission, I think, are hard to avoid in this job.
And how does that kind of practically express itself? Does that just mean hold more stocks? Or is it part of the process that really informs?
I think not so much hold more stocks. It's just like identify more things. I had this investment insight from a meeting with Jeff Bezos at Amazon once where I was asking him about competitor, and he's a great and brilliant person.
They have any competitors left?
Yeah. No, I don't know if this is his own insight or, one he took from someone else, but he said in his observation, companies rarely lose ground to competitors that they know about. Companies lose ground to competitors that come out of nowhere and you didn't realize they were a competitor until they were. And so, not that this is your business, Meb, just the show, but you have certain competitors out there, maybe like Patrick O'Shaughnessy or something. I don't know if he's a competitor, but that's like the best.
I think he was the first guest on our show.
Nice. I like Patrick as well. I enjoy his shows. And maybe I'm stretching this analogy too much, but you probably, if you had to think of yourself in competition with someone else, the thing that will surprise you is that there's someone on TikTok who's 17 years old who you didn't even think of as a competitor. And then you wake up and one day they are. And actually, Amazon invited me years ago to give a presentation to their senior leadership team in terms of how I think of their kind of competitive landscape. And I sort of stole Jeff's point and then repurposed it as my own and said that what I would worry about were companies that all of a sudden had a very big market cap that were sort of tangentially related to what they did, where a lot of people were skeptical about them, like skeptical about the financial prospects of the company. And the analogy I made at the time to them, and I should have acted on it more, but I said, this was in 2019, I think, that I gave the presentation, but I said, if I were Intel, I'd be worried about NVIDIA. Like, I don't think Intel at the time completely perceived NVIDIA as competition because they were, GPUs versus CPUs. But obviously it turned out that they were. And I said, if I were Amazon, I would probably keep an eye on Shopify because people at the time, Shopify wasn't profitable, but was growing quickly. And, it's kind of on the fringes of what Amazon did, but might, over time intrude on it. And the example that I cited for Amazon is I said, I remember talking to Target with one of our analysts who knew retail companies really well. And we went to visit Target once. And she said to them that Amazon feels like real competition to you. And they said, no, they're not. They just have a tiny amount of revenue. They're a fly on our back. And she said, you're looking at their revenue, not their GMV. Like their GMV is a lot bigger than you think. In fact, it's more than your retail sales. And they actually are a real competitor. And I said, don't fall victim to that trap yourself, Amazon. I think Amazon, as parenthetically, probably has largely avoided falling victim to that threat, but it's important to be vigilant.
Let's talk a little bit about what's going on in the world today, where you guys find an opportunity, where you guys not find an opportunity. The start to this year looks a little different thus far, although we're recording this on Tariff Day. So who knows by the time this comes out in a week. But we've had this U.S. kind of romp and stomp for 15 years. And at least the start of this year looks a little different necessarily than years past. Who knows? Anyway, how do you see the world today? Opportunities, landmines, all that good stuff.
I do think the world has changed a little bit under the new administration in the United States. And to me, the kind of most seismic announcement was Germany removing the debt brake. Germany had been running roughly a 6% fiscal surplus, and talking about going from surplus into deficit is a pretty dramatic move. And I think kind of transformative for Germany and to some extent for Europe in total. And so my sense is that Europe will grow faster than it would. Rates will stay higher than they would. The banks have reflected this, obviously. This is roughly right. I need to double check myself, Meb, but I think European banks have outperformed the Mag 7 for the last 5 years now. Who would have thought that stodgy Deutsche Bank and Barclays and Santander and UniCredit would be better stocks than the combination of NVIDIA and Tesla and Meta and so on. And so that is an area where I think there was opportunity. I think there will continue to be opportunity. We've seen a huge move in non-US defense stocks, the Mitsubishi Heavies and Rheinmetalls of the world. That feels not evanescent to me, but kind of a bit of a lasting change in terms of how the world thinks about things. As you said, romp and stomp, like the US has been a lot better than non-US markets. And I'm the principal investment officer of one of our funds called Euro Pacific Growth Fund. And I've had a lot of meetings with our independent mutual fund board, but also with advisors and clients who are invested in the fund, sort of saying to me, when are non-US markets going to turn? When are they going to be better than the US? And I keep saying, well, one day they will be. I kind of feel like that day has arrived. And when markets shift and markets change, even though you see it happening in front of you and the math and the numbers are right in front of you, sometimes it takes a little while to wrap your brain around it. This is an odd analogy, but if you've ever been in a car accident, hopefully not a very serious one, there's always sort of a sense of wonderment, I find, for like the first hour where you're sort of like, wait, I was driving along on Oak Street and everything was fine. And then all of a sudden now my fender's all mashed up. How did that happen so quickly? I kind of think we've had a moment like that.
We wrote this piece recently. I love collecting investing quotes, and we post them on Twitter, kind of automated. And I don't agree with all of them. I just like hearing them, and people get all hot and bothered about some of them. But there's a couple phrases that are, it's like a virus I can't get out of my head. And there's one recently, and this is from the late, great Peter Bernstein. And he said, I view diversification not only as a survival strategy, but also as an aggressive strategy because the next windfall might come from a surprising place. And I think that speaks a little bit about your kind of European. I do all these meetings for the last number of years, and the amount of advisors, their tolerance and patience for talking about foreign and, God forbid, emerging market stocks is just like gone down and down and down to the point, like by the end of last year, people were like, don't even bring this up. I've had enough. And this applies to everything. It applied to small caps, value, gold, who knows? But I thought that was a fun quote. I think when you said that comment about the banks beating the Mag 7, I think most people would not have expected that.
Yeah. And it's important to remember that I'm very bullish on kind of the United States generally as a concept. And I was born in Canada, and both of my parents are born outside the United States.
Oh man, complicated for you right now. You got a lot of conflicting sides to take.
Yeah. But I became a U.S. citizen. My children are all born in the U.S., and the U.S. is incredible. It was a source of innovation and progress. But there are a lot of amazing companies and amazing people outside the United States who are going to kind of create value. An analogy I often make is to basketball. Like my family, we're huge NBA fans. We live in San Francisco, so Golden State Warriors fans, of course. But it's been a while since an American has been the most valuable player in the NBA, and it's not going to be an American this year either.
This is a complicated topic, by the way, Carl, because I'm a Nuggets fan, and I like to talk about expectations and reality. And I'm trying to be objective here, which clearly I'm not. But in my mind, we're coming the night after Jokic posted a 60, 10, and 10 stat line. He also posted a triple-double this year in one game, which, is just ludicrous. And he's going to lose to a Canadian, but the odds are even more askew. So the Jokic is like plus 300. And in my mind, this is probably the only bet that I'm willing to make and lose all my money and be totally happy about it, because then I can just complain for the next 10, 20 years and see, I told you so. See, he should have won that, and you still voted for this free throw merchant. Anyway, Curry had a really special night this week too. So we're going to look back on this time and think, my God, what a amazing time to be watching basketball. Anyway, sorry, end of rant.
No, I like that term, free throw merchant. That's hilarious. But yeah.
This is like my all-time funny bone topic right now is Jokic not getting MVP this year.
You needed Aaron Gordon to be a little healthier this season.
Yeah. Well, thinking about global, I'm guessing you get this probably in every institutional conversation. And so maybe you're going to roll your eyes, but I'd love to hear how you think about this topic, because like it's of the word cloud, tariff is like number one. Is this something that plays much of a role in your process and security selection? And if so, like, how do you think about it? How do you game plan for a little bit of the chaos that this entails?
It's hard. I don't feel like I have a particularly good answer to that. I'd say none of us have kind of experienced this before, so we're all trying to figure it out. And one thing I did recently is, on the suggestion of one of my colleagues, is I had ChatGPT sort of summarize all the principles in The Art of the Deal. And then, assuming that the administration is represented by DJT, apply those principles to what he's been saying about tariffs to sort of say, if you look at his past, I sort of think almost remarkably, President Trump often kind of says something that seems outlandish and then actually does it. And so let's look at what he's said over time, and then let's look at how it applies to what he might do currently. ChatGPT in its infinite wisdom would tell you that he's likely to probably moderate some of the things that he's asked for, that he negotiates very hard and well, but at the end of the day, understands that he needs to settle. But until the moment that you settle, you have to take like a maximalist point of view. Like if you and I are betting on whether Shea or Jokic is going to be the MVP, I've got to try to drive the odds up in my favor as much as possible. So right now, the odds probably favor me 2-1, but I want better odds than that. And I do that until the moment that we reach across the table and shake hands. So I'm probably in the camp of thinking that there may end up being some moderation in the administration's position. And I'm probably in the camp that companies are unlikely to completely reorient their supply chains, that they'll try to sort of suffer through it for a while. By the time of the midterms, this administration may lose some of its clout, and 4 years from now, maybe all of it. And I'm probably more inclined, where things are very dislocated, to view it as opportunity. Bombardier is a company that I followed for a long time. Actually, back when I was on the sell side in the 1980s, I was one of the first analysts to write a long research report. I think I was the first analyst to write a long research report on their aerospace business, because at the time they were in the ski-doo and sea-doo and rail business. And airplanes weren't perceived to be very profitable for them. Roll forward to present day, and the Global 8000 is kind of the Hermes bag of billionaires. It's the plane that everyone wants, but they're very impacted by tariffs, and the stock has reacted a bit accordingly. But I sort of believe that they have enduring economic staying power, and I think people will end up paying for these planes because they need them. And so I'm looking at it that way. And it's hard to assess. You've heard the same statistics I have, but there are automobile manufacturing where items cross the border 8 times before final completion. Crossing the border back and forth 8 times and having a tariff assessed each time is uneconomic. And going back to the discussion of my family, my father, you'd asked about him before. He's an entrepreneur and he has a small chemical company, but manufacturing some of their products like adhesives involves polymerization and kind of finishing and packaging. And for 40, 50 years, he's operated across both borders, Canada and the United States. And it would throw his business into complete chaos if he were to sort of reorient the way that they've done things.
I think I would just say, when people ask me, say, I don't know. It's kind of like what you're saying. I was like,
yeah, I think that's what I just said.
Someone was giving me asking about taxes and all these things, and I said there might not be an IRS in 2 years. Who knows? But we can only plan with what we got today.
Some things will maintain kind of enduring value. I think on the margin, it should make you a little bit more focused on sort of the durability of a business proposition. You were mentioning emerging markets, Meb, and one of my favorite companies kind of over the course of my career has been Vale, CVRD, the Brazilian iron ore company. And I really think that business is subject to government intervention and the government levying fines because they extract the iron ore from the sovereign country of Brazil that is subject to different political pressures. But if you could somehow magically remove the fact that there was political interference, and to some extent, political interference gets mitigated by economic concerns over time, so there's a balance, I'm more confident that technology will not be displaced. I was talking about small startups disrupting incumbents. Steel's got a couple thousand years of history of defeating the incumbents. It's very strong. Tell me what material you think is going to replace the steel in your office. I see plenty of steel there right now, and there's steel in the computer that you're talking to me on right now. It's just a remarkable, magical material that if we had never invented, we'd just be incredibly excited about right now. It'd be the hottest stock in the world if we'd never come up with it. Taiwan Semiconductor and Vale are probably the two stocks that I've held the longest in my career. I mean, from the beginning of when I started up as a portfolio manager, I've held them in different sizes, so I've reduced them or added to them over time. It's not like I just bought some fixed amount and held on to it. Although probably I should have done that, honestly. That might have been a better strategy. In the case of Vale, the things that I think would disrupt them most are political pressures. And I've largely been wrong about that. In terms of what might disrupt them fundamentally, I guess there are two things. One is demand in the world for iron ore could slow a lot. And to some extent, it has. And this was a very strong stock in the early part of the 2000s, partly because of the growth in China. And at the time I looked at it, and I also looked at growth in other markets like Korea, Japan, the United States, demand for iron ore. And what I found was that iron ore demand grows very strongly in a country for a period of years, and then it sort of plateaus, but it actually doesn't collapse. It sort of stays at that high level. And this is from memory, but I believe that like US iron ore demand is around 150,000 tons a year, ballpark, somewhere around there. Chinese iron ore demand's over 1 billion tons. And in the United States, it peaked kind of in the 1950s, and it's continued since then. So in the 1950s, we did a tremendous amount of building subsequent to the war. America, the manufacturing capital of the world. And things have tailed off a little bit, but we have a lot more buildings now. We have a lot more cars. We have a lot more laptops and chairs and things like that. Maybe if the world dramatically stopped growing, but I'm not a believer that that would happen. That would disrupt it. The other thing that would disrupt it would be a different material, like you say, but there doesn't appear to be a different material. Like some people thought aluminum would be that, but aluminum's too expensive to refine. Steel is sort of extraordinarily useful. It's fairly lightweight. It's very rigid. It's very flexible. It's relatively cheap to manufacture, and it's very useful. I remember I visited Amazon once, and I was looking at Amazon as an investment. And the thing that I was struck by when I was at Amazon was how many buildings they were building on the campus and building them out of steel. And I had the thought that, even Amazon growing is good for steel.
As we talk about, this is an interesting theme. As you talk about kind of the ones that are curious to you today or interesting, what are some areas that you're kind of neck deep in? Could be tech, AI, could be healthcare, any other, could be international. What's on your brain?
I guess in addition to the macro things that you and I were talking about, like everyone, I'm trying to get my head around semiconductor demand and how transformational AI is. I was speaking to someone at one of the large LLMs yesterday who works at one of the large LLMs, talking about, how really their GPUs actually are in fact melting from the demand. I think my conclusion about that, I'm sorry to be boring, but my conclusion probably is that Taiwan Semiconductor is still a very significant beneficiary of that. I think they have a proven unique ability to manufacture chips that no one else in the world is even close to them. And the Chinese have spent a lot of money, a lot of effort trying to do that, and probably honestly have taken some technology from Taiwan or, had technology move over, and yet still are uncompetitive at that. And we've got the CHIPS Act here in the United States, and we're trying to have TSMC manufacture here. And, they're finding it hard doing it themselves. So I like that. I think that they're an ultimate beneficiary. Another company, Flutter Entertainment, the company behind FanDuel. I think the economics of that business of sports gaming are very interesting. I don't know how familiar you are with it and whether you played around. And well, you're a Nuggets fan, so maybe you bet on, and you knew the odds on Jokic, so maybe you know a little bit more about this than you would.
Again, I hedge my consumption. So it was when the Nuggets went to the finals and won a few years ago, and mentally to be able to buy tickets to the game, I'd buy some futures on the Nuggets making it to the finals. So those ended up just rolling into the cost of the tickets. So from someone who has long been kind of a quant and stats person, I like that aspect of the game and pay attention to that part too. So yeah.
Congrats on your one NBA title. That's really a remark.
Hey man, I grew up watching the Nugs, and it was never much to watch. So we're one. As a Broncos fan, my childhood was filled with disappointment and eventually retribution. So I feel I'm at peace now. If the Rockies one day ever field a top half, top quartile team, I'll be happy with that that as well.
Yeah, I was a Broncos fan growing up too, actually. So
A lot of my Canadians friends are Broncos fans. I think it's kind of like whatever's roughly closest, but Elway was fun to watch. All right, so FanDuel.
the FanDuel, I'm very intrigued by companies for which there are economies of scale. I remember in the case of Philip Morris, they used to say that Philip Morris spent more money advertising Marlboro than all the other cigarette companies spent advertising a brand combined. And yet Philip Morris had the lowest advertising cost per stick of any cigarette company in the world. I love companies where it's just very hard to ever catch up to them. I think Ryanair maybe is a little bit like that in the airline business. Ryanair likes to say that their average fare is lower than their next competitor's lowest cost structure. So how do you compete with that? And in the case of FanDuel and Flutter, they have a bit of that economy of scale as well, because where you make all the kind of money in sports gaming is on the incremental bets. So if you're betting that the Nuggets are going to beat the Spurs, that's not a very high value added bet. The odds are in their favor. But if it's the end of the third quarter and Jokic has had 36 points and 10 rebounds and 5 assists or something like that, and you want to bet that he's going to get 10 assists and get a triple double, that's an interesting bet. And the pricing on that reflects that for FanDuel. And you want to go to FanDuel to make that bet because they have more bets like that and they're better priced like that. Because in a way, it's like a store that has more assortment. You want to go to a store that has a lot of varieties of milk, oat milk, almond milk, soy milk, whatever other kind of nut milks there are, raw milk, lactose-free milk, etc. And FanDuel has that variety of things. And so they price the tail better. Kind of like an Amazon was an analogy to that. And I told you about my grandmother's general store. My father wrote the slogan for the store. It was for service and value. And I like to say that if they'd only added assortment, our family could have started Amazon, but they missed the third leg of the stool. So you want to go to the website that has the most options, the most bets that you can make. And they're even more refined than that. Like, is Jokic going to get a triple double at the end of the third quarter? By the end of the third quarter, maybe. And then also, is he going to miss his last 3 free throws? There are various permutations that get more and more interesting. The other thing that Flutter and FanDuel do is that they study your behavior and they customize their offerings. And they've come under some criticism for this, and it's worth being mindful of that. But they customize their offerings to see your own behavior. So, Meb, if you kind of win a disproportionate amount of bets on Nuggets games in which Nikola Jokic pulls out 2 hours before the game because of an injury, they will not know it, but they will effectively conclude that you have superior information about Jokic. And maybe the reason is that you're from Denver and your cousin is his trainer. And when he's injured, he calls you and says, "Oh, Nicola's got, a pulled hamstring. That hamstring's acting up again today. He's not going to start tonight." And so you adjust your bet accordingly. And so they limit their loss exposure to you, which is interesting. But the other thing that they do is they use your activity to price the odds for everyone else. Because they say, Meb consistently gets this right. So we don't exactly know what his inside information is. That's not our job. But we do know that because he's so right, it should influence the way that we price this. It's not a commodity business. It's a business that benefits scale. And also, the reality is that everyone bets on games anyway. Like you and I, maybe at the end of this, will bet on Warriors Nuggets or something if they meet each other in the playoffs. And it kind of institutionalizes and broadens that.
It's funny, like to see this market develop, right? It's becoming very mainstream. You're seeing the prediction markets start to permeate too. But then in some areas, it almost is like still the competition is limited. So state by state basis. So for example, like Florida, I think they only like there's like a Hard Rock app or some places. And so some of the lines may not be reflective of what a free market would be. Where do you see this going? Like the gamification of kind of a lot of this. Do you think this will become more widespread and kind of, particularly with the prediction markets, a lot of that is not, I saw Robinhood now lets you bet on elections somehow out of your brokerage account. Any thoughts?
I think it's interesting. I do think that sports gaming will be legalized in more states. I think it'll end up being legalized in California. The opposition in California are the existing casinos in California. And some people feel like it's morally wrong. But I think that the states that have adopted sports gaming have seen such nice revenue increases from it that it's hard to walk away from it. A closet market has developed for people to do sports gaming in states, even though they're not legally supposed to be able to do it in this. So it, usually when you see that happen, that's a sign that there's so much demand for it that it's inexorable and needs to change. In terms of betting on outcomes, your wife might be better at answering that than you and I are, because it's almost a philosophical question. But I suspect that things will head that way. And we do fundamental analysis in the investment business, you and I, and at our firm. But to some extent, we're making long-term hypotheses on outcomes that are currently unknown to us. And that is inherently interesting to people. And people love talking about it. Like, is White Lotus season 4 going to be as good as White Lotus season 3 or something? Like, I'm sure there'll be some way to bet on that someday. And, the success of Polymarket.
My favorite Polymarket, I posted about this, and I don't know what the trigger is and how they determine this, was, will Jesus come back in 2025? And it's like a 4% chance. And I said, well, I'm going to move to Europe just to take some of these easy money bets. But then if you do the math, it's like the same return as T-bills. So quasi-efficient market. But I thought that was really funny. Some of these markets that they can make a market in.
Well, but that, I guess that French whale, I thought that study that he commissioned saying, how do you think your neighbor is going to vote, was such a good.
So good. I thought that was so smart. God bless him. He deserves that money. What a thoughtful listeners. What Carl's talking about is they would ask, instead of asking who do you vote for, and people love to lie on certain, polls. And I do a ton of polls on Twitter. And I'm convinced you guys just troll me now on these polls. I'm convinced you guys just answer the opposite just to see me get triggered about something. But he asked if your neighbor's voting for president, who are they going to vote for? And that ended up being way more accurate. I love just the turn of phrase that changed that to be such a different insight. That's so cool to me.
Yeah, it's wonderful when someone thinks of a slightly different way of looking at a problem. And it's like the veils that cloud the truth fall away and you just see the essence of something.
Does Carl got any good secret questions to ask CEOs when you're talking to them, or as you're doing due diligence into these companies? There was one that I really liked when I was doing a reference check for somebody, and usually they're like, "What's he like? What are their good traits?" But they said if someone did have something bad to say about so and so, like what would they say? And I was like, that's an interesting way to say it because you're not putting the onus on me. You're like, if people were to complain about this person, I thought that was good. But so as you talk to these, and do your deep due diligence, what are some thoughtful things you think about? Or do you not talk to the CEOs and trust them that much? You say, you know what, Jeff, I can't believe everything you say. How do you think about it?
I have a couple thoughts about it. I do like to ask people what they think their greatest errors of omission and commission are. I like hearing the answer to that. I guess another sort of technique or thought that I have is I usually find that only one thing is important, but often we think many things are important. So you go into a meeting and you're like, What do you think your tax rate will be next year? Maybe that is important or maybe it isn't. Or your negative cash flow right now, when do you think that's going to turn? Or your gross margins are starting to inflect. How much room do you think there is? Or your new CFO came from Oracle. Do you think she will change the culture of the firm? Those are all kind of theoretical questions you could ask, but usually there's only one question that mattered. Like usually it was the gross margin question or the tax rate question or the new CFO question. So part of it is like figuring out what that one question is and then asking it over and over again. And I learned this from one of my colleagues, now deceased, but his name was Richard Havas, and he almost had a slightly Tourettean way of conducting an interview. He'd ask the same question over and over and over again, so that finally the management team, I felt like they were so beaten down by the repetition that they'd sort of tell him exactly the truth because they just couldn't stand to be asked again. And they kind of knew that he would sense when he'd heard the truth and he'd give him a break and stop asking it. And I find with most investments, well, sometimes there isn't just one thing that matters. Sometimes it's 10 things that are important, or 20 things, or 30 things. And if there are 30 things that are important, that is a hard one to get right. And you should probably spend your time doing something else. You should probably move on from that one because it's going to be hard to get 30 things right. Or sometimes there's only one thing that matters and you figure out what it is. And the answer is the same thing that everyone else in the world thinks. So you can't really add value to it. Where there's magic is when there's one thing that's important to get right, you understand what that one thing is better than other people. And you've come to a different conclusion about that than other people. And that different conclusion will be very meaningful for the share price. And one example that I sometimes cite is I remember looking at Apple again in the 2000s. And you may remember this, but I'm older than you are, so you might not remember it as well as I do. But initially with Apple, when they sold iPhones, there were two issues. One is they recognized the revenue ratably because they weren't sure whether people would fully honor the value of the phone contract. And so they weren't reflecting all the profitability up front in the income statement. And you had to make a determination as to whether that was money good or not. The other issue with Amazon is the phones cost a lot, and there was only one provider of them. You used to only be able to buy iPhones from AT&T. T-Mobile and Verizon and so on didn't offer iPhones. And the reason they didn't is that they thought the phones were a bad deal. They weren't willing to subsidize them at a price that consumers were willing to pay because the value of the voice plan would never be good enough to cover the cost of the phone. The insight that AT&T had was that the value of the data plan was going to end up being a lot more valuable than the value of the voice plan. Now, of course, phone companies sell service with voice for free, and everything's about data. And I remember at the time looking at Amazon and kind of feeling about that accounting question that I mentioned. So maybe I'm cheating and I'm having two issues here. But more importantly, thinking that that insight about data was really interesting. And I was informed by that by our analyst who covered AT&T, who was a different analyst than the one who covered Apple. And then also informed by the experience in other countries like the Philippines, where in the Philippines, people weren't using their phones to talk because talking was expensive. They were just texting on their phones and they were communicating that way. And how interesting that was. Like, I think my own behavior, and maybe yours is the same, is that I text on my phone much more than I talk on it. I text my son happy birthday and then I try to call him, obviously, but I probably spend more time I definitely spend much more time texting him. I feel like so much of the time we're looking for information and we're looking for insight in this job, but we have to recognize and acknowledge that much of the time you don't find it. Call it 2,000 or 2,500 working hours in a year. Over 2,000 of them, at least in my case, don't generate insight. We're looking for gold all the time. Most of the time you're not finding it. when you do find it, focus on it and try to dig up more of it and fill your pockets with it. But understand that there are going to be months when there are no insights.
Yeah, this is why I'm a quant. It's because anytime I used to be discretionary. I thought everything, every Iris zone, every conference, every Barron's article, pitching stocks. I say, man, that sounds like a great idea. That sounds like a great idea. That sounds like a great idea. But we use a quote internally all the time. And it's kind of a generic quote, but it's one that I think recenters you on kind of what's important. We say it doesn't have to be a unique insight, but it has to be the critical one. In so many cases, like we love to just add so much additional information to so many of these theses on whatever it may be, and then kind of overlook the one that you should be putting all the weight on of your optimization. And these other 70 inputs, it should be like a 0.001%, weight on what it matters. But it's hard for people. We love to kind of add a lot more complexity and different variables to what we're looking into.
Yeah, it makes you sound smart to say, oh, there are 100 things that I'm looking at with respect to this investment. That colleague I was mentioning before has owned Tesla for a long time, very successfully since it was, $1 billion company. And the way he frames it is he likes to say, I think electric cars are better than combustion engine cars. Over time, I think the majority of cars manufactured will be electric, not combustion engine. And I believe that Tesla will be the leader in that. And so if they sell 60,000 cars and that doubles to 120,000 cars, am I going to sell it? No, because one day I think they'll sell 20 million cars. And when they are selling 20 million cars and the world sells 80 million cars a year, let's talk again and I'll reassess it. But in between now and then, that's my thesis.
I don't want to wind down, but as we start to wind down, you're someone who reads a lot, who is always thinking about kind of what's going on, what's around the next corner. So is just any topic that you think is not getting enough attention that's kind of stuck in your brain here in 2025?
If I were to make up a big picture one, and I do this with great risk, I sort of think that the field of biology is going to produce a lot of economic opportunity. And so on the margin, I'm trying to spend energy understanding breakthroughs there. So I shouldn't give anyone advice about what to study in college. Studying computer science has kind of been like a 20-year home run, and it's the number one major, I'd say, at every big college campus in the country. And it's sort of considered a surefire path to doing something hard that will end up leading to something interesting and allow you to earn a good living. I worry for all the people who are graduating with CS degrees that that's not going to be true anymore, that that's no longer the truth. And I probably, if I were STEM inclined, would study biology instead. A friend of mine, Peter Walter, wrote a kind of textbook for freshmen in college or on biology, and I'm making it a project to sort of trudge my way through that book. But boy, is it that field changed a lot. I'm 60, but your biology textbook looks nothing at all like the biology textbook that I read 42 years ago. I took biology in college also. There's just been so much innovation in the field, and I think it's going to produce great economic opportunity, and we're on the verge of this. I think you were maybe going to ask me about the GLP-1s, but GLP-1s are right up there, I think, with ChatGPT is kind of one of the most interesting things of the last decade, one of the most transformative. Vertex is doing some really extraordinary things first of all, in cystic fibrosis, where they have the first effective treatment for cystic fibrosis ever. And when you cure a major disease state or you ameliorate the conditions of a major disease state, it's really interesting. And they have also I think now it's a double-digit number of people had type 1 diabetes who no longer have it anymore. That's a really interesting thing for the world to do.
This reminds me, so I was a biotech student, undergrad, and got seduced by the financial markets. Most, if you experienced the late 90s bubble, it was not just internet, but biotech stocks too. And it's funny you mentioned Vertex because there's an old, really old book called The $1 Billion Molecule. I think that's the name of it, about Vertex and the founding of that company. And is actually a really, really fun read. We'll put it in the show note links in case I got it wrong, but I think that's the title.
They're a really interesting company. In addition to this Doug Melton treatment for type 1 diabetes, where they implant islet cells and basically recreate your pancreas, they also have a treatment for pain. And we have had this opioid epidemic and crisis in the country that has caused so much suffering for folks. And if we could treat pain, neuropathic pain, without a narcotic, which is what, all opioids are effectively, that would really have huge societal consequences.
Yeah, it's exciting. A lot of the broad healthcare, particularly on the biotech side, the indices, they seem to go through like a 4-year cycle almost, where you have kind of euphoria and amazing returns. And at least for biotech in general, a lot of the indices kind of gone nowhere for 3, 4, 5, 6 years. So definitely some good fishing out there, I imagine.
Yeah, there's a bit of a disconnect right now. We're so wowed by what Anthropic or ChatGPT are doing, and we should be. It's awesome. But pretty wowed by what pharmaceutical companies and biotech companies are kind of in the doghouse right now. And they're doing some really interesting things. And there's some really bright people there, and it'll have big impacts on the world and generate a lot of economic value. You've seen that in the GLP-1s now, right? Like, it's already over. Those are going to be the biggest drugs in the history of the world.
It's going to be fun to watch, that's for sure. We were chatting before this got started on one of my favorite movies was Gattaca, and talking about how that future is kind of here now with the sequencing. It's pretty close to just being able to sequence it very low to almost no cost. So what that unlocks is going to be exciting. You've had hundreds, thousands of probably trades over your career, and then dating back to pre-Capital Group. Most memorable? Anything that sticks out?
I'm trying to think of some good ones. The bad ones, for some reason, accumulate in your mind. I remember talking to Stan Druckenmiller once about whether he thought he'd become a better or a worse investor over time. And I don't mean to quote Stan incorrectly. It was just, we were having lunch, but Stan was musing that perhaps he'd become a worse investor over time. And we were both sort of reflecting, if that were the case for each of us, why it might be. And one reason was that even though you get older and if you're lucky, you've had some success in life, and, you can, afford more things. So you should be more risk tolerant. In some ways, you become less risk tolerant because of the accumulated pain of all the mistakes that you've made and how much it hurt. You're like Novak Djokovic. You've won everything, but you've got an ankle injury and a knee injury and a shoulder injury from, all the things that you've been through. Although in our case, it's not our bodies that are injured, it's our mind that has all the injuries. One investment I remember making was when I worked on the sell side. Back then, you could buy stocks and then you could trade in and out of them before they settled and before you had to come up with the money. And at the time, I would buy shares of a company in Canada called IF Biochem. It was a small company in the region of Quebec called Laval, and they were working on a treatment for AIDS. I sort of bought it because I thought, when they had a press release, I sort of thought, oh, it'll probably go up just because of the press release. I was just acting on the news wires, but I'd buy it and then I'd try to, and then sell it before I settled. And I made some money doing it, maybe a few $1,000s, and was very proud of myself. And that company ended up having a protease inhibitor and being bought by GlaxoSmithKline and actually curing AIDS. I mean, other people did too, like Gilead and so on. But obviously, I should have held on to it. And I think when I was trading in and out of it, it had maybe a $30 million market cap. It was a small, nothing company. And I think it ended up getting sold for around $1 billion. So
Oh, man.
That's one that I I remember missing.
Aye, 50, that's like 50, 100 bagger territory.
I'll tell you an unusual one that has been good for me as well. One of my colleagues and one of my good personal friends kind of made me think more about Bitcoin, particularly Bitcoin as a store of value years ago. And so I purchased shares of MicroStrategy at the time. It's been a rare stock that's been better than NVIDIA. That one, I would say, I did with less certainty than other things. Like if I'm looking at Nike, I feel like I can kind of like build the cash flow model well and try to have a conclusion about their competitive positioning versus Adidas or whatever the operative issues are. Whereas with MicroStrategy, I made it a small position, but then it became a much larger one organically. And I want to sound intelligent for your listeners, but it's important to remember that there's some element of this job that is a little bit uncertain as well. That was kind of a nice one where I might have done some decent analysis, but I had some good fortune as well.
It's funny always when you look at some of these investments. I got to have lunch with Saylor last week or 2 weeks ago, whatever it was in Florida. Definitely a character. But, sometimes, and for me, this has been on the angel investing side, it's fun to watch certain investments that play out not necessarily for the reasons you thought. And so the classic pivot in some cases, but you can do this with almost any successful stock. It could be Microsoft, Amazon. It could be some of these companies you may have invested in, Lilly, for some other portfolio or cash flow or dividends. And all of a sudden they have these GLP-1 drugs. So it's fun to have those nice accidents, the wrong word, but different drivers than you may expect it at some point as well.
And I feel like one of the biggest drivers with MicroStrategy that, has been fortunate of late is like the new administration has been incredibly supportive of Bitcoin. And so, I had no idea that Donald Trump would get elected president again and that he'd be very supportive of Bitcoin and speak at Bitcoin conferences and that his, family would invest their personal money in crypto. And that feels, in the near term, at least, some Bitcoin maximalists would argue doesn't matter. They're not a fan of it. But in the near term, pretty supportive of it.
Yeah, never a dull day. Carl, I'd love to keep you all day, but you need to go out for a swim in the warm waters, and we probably need to go host a Tariff happy hour. People want to find you. Where do they go? If they want to read what's on your brain, what you're up to, what's the best place?
I guess, the Capital Group website, read about our funds, the funds that I'm involved in as a portfolio manager, Europe Pacific Growth Fund of America, and a fund called New World Fund. And, Capital has a pretty active communications department, so I'd start there. But thank you so much for having me on the show. I learned from you, and I enjoy listening to your podcast.
It's been a blast and a blessing. We definitely got to do this again sometime.
Okay. Thanks, Meb. I'll look you up in LA.
Podcast listeners will post show notes to today's conversation at mebfaber.com/podcast. If you love the show, if you hate it, shoot us feedback at themebfabershow.com. We love to read the reviews. Please review us on iTunes and subscribe to the show anywhere good podcasts are found. Thanks for listening, friends, and good investing.